Hey everybody, I hope everyone is doing well and had a good day. I'm going to do a very brief recap today. I have other things I have to do today, but I thought I wanted to share my thoughts on especially the Open today. I thought it was very interesting what we had. We can start quickly with the daily chart. We have this sell-off, a big bull reversal, but we're still below the moving average. It's a trend line break, yes, but if this is going to be a major reversal, the market is probably going to go down and test the trend's extreme and try to form maybe a higher low double bottom. So here we have maybe 1, 2, 3 legs up against the trend, again all below the EMA. And so the bears might look at this as a low 3 trend resumption setup going into today. So a stop order below yesterday. And for today, I want to talk about the Globex chart for even just on the 5-minute chart. I think the Globex chart can help bring a lot of clarity when the RTH chart isn't as clear. So here's what I saw going into the day. I was looking at the Globex 5-minute for the beginning of today. And we can see, obviously, strong rally, but climactic and overall part of a big trading range, big down, big up, lots of sideways price action here. Sort of became an endless pullback, sharp reversal, and then sideways, but continuing lower. And that's where we are going to today. So for support and resistance, we have, I thought somewhere in this area on this bull breakout, traders are trapped. And I say somewhere in this general area. Is it this stop order? Is it here? Here? Well, again, I think it's this general area. The market will probably find support. And then here, going into the day, we have a tight bear channel, but we can draw a channel line here connecting these lows, and the market is attempting to break out of a bear channel. 75% chance that it's going to fail and reverse within 5 bars and then go and test the trend line. What's the trend line? Well, we can draw a parallel, maybe a best fit line, maybe it's something like that. And so maybe here you expect a reversal back up and test of the trend line. One more thing, there's this more major swing point that the market broke out of here. And you can see just before the open of the day, that's this breakout point is one of the support levels that we're testing. And we repeatedly tried to break out below it, bear breakout, close below, but no follow through. So I think buying as soon as the market opened today, as crazy as that might sound, was a reasonable thing to do because of context. And then quickly, market vacuumed up to that trend line. Now, it seems that we have a trend line and a channel line fairly intact, but then we had this big bear breakout. And this clearly broke below the channel line. You could say maybe that's just an overshoot, but this is more clearly breaking below. And you can redraw the channel line. And because of that, you can also redraw the trend line. The market's always giving you new information that you can work with. And I forget where, but Al talks about it in the course. You're supposed to, if you see a trend line or a channel line, you should draw it. You should observe how the market behaves around it. And support and resistance is really what controls decision making. It's not, he talks about it's not the news. There's no news events that, well, I don't want to get sidetracked, but there's always a news story to blame for when the market crashes or praise when the market rallies. But in reality, all the information on the chart explains what happened. So it looks like a late leg in a bear channel, breaking below. So again, probably going to reverse within 5 bars and then go and test the trend line. We're also testing this breakout point. I suspect there will be buyers in this area. One close below, And again, it's a general area, so maybe support is in this zone. This is the buy zone of the trading range. Big up, big down, buy low, sell high. Hard to want to buy after a 5 or 6 bar bear micro channel, but bar 7 reversal, bar 8 follow through, fairly good for the bulls because the bears are hoping we break out below the channel line and just continue to crash and convert into an even stronger bear trend. But you can see what happened on bar 6. At the close of 5, we ended up rallying, testing the channel line, finding sellers. There's a scalp there. But now you really need momentum if you're selling because you're at the bottom of trading range. So the probability here favors the bulls. We get the reversal and the bulls close above the channel line. So good for the bulls. I suspect we will get a rally to up here, the trend line. But do I think we're going to go straight down and straight up? Probably not. You could say bar 7 is a high 2, implied high 1 within here, bars 5 and 6. 6 was a reversal attempt, but no spike break. So the first spike break was when bar 8 went above bar 7. So implied high 2, but on this chart, it's a high 1. It's a trendline break. It's a decent reversal and follow through. It's probably going to get a second leg. Bar 9, what is bar 9? Well, it's a low 1 at the bottom of a trading range. We're still in the support zone. Bar 8 was the signal bar, the low 1, probably buyers below. 9's a good bar, but how much is really breaking out below the prior bar? And it's only breaking out below the prior bar. It's not breaking out below many bars to the left. So it's possible that on the smaller time frame, what we have here is a bear trend, trendline break, retest. The bulls are going for the higher low major trend reversal. Then we get bar 10, a second reversal. This is the high 2 on this chart. High 1, high 2, and then a strong breakout bar for the entry bar for the high 2. So what happened on bar 11? Well, bar 11 traps traders. Bull trend bar closing on its high and a micro gap from the high of bar 10 to the close of bar 11. You know the bulls have a target in mind. We had a breakout attempt of a channel. We have a second reversal with strong buying pressure, good bull bars, and now a bull bar closing on its high for the high 2. So it might be going higher. The bears can argue bear trend, low 1. Maybe they get a low 2. But in this case, we just continue to rally. These pullbacks are shallow. We never even traded below a bar before the bulls met their target. You could say maybe that didn't quite get there. But if we take a measured move of bar 11, we went for 1R. And this is strong enough, it'll probably get retested. The bar 15 close will probably get retested, which we do on bar 19. Is 19 a good low too? Near the bear trend line. The trend line break was weak. This is still fairly tight. The bears might have to do more. Maybe we have to go more sideways. But it looks like it's a bear channel or a trading range. So that was the main thing I wanted to talk about today. And then what about bar 23? Looks like a lot of bars respecting this resistance level. Try to break above it, fail, try, fail, test, sell off. So we're trying to test it again here. 23 vacuums up to it, but does not close above it. And then 24, bad follow through. Where's the momentum? Is this simply a vacuum test of resistance? And is this a second leg trap? Leg 1, maybe 2-legged pullback, second leg to the top of a range. 25, do you really want to buy above 25 as a high 1, or would you rather sell below 25? 25 is not a great signal bar for stop order shorts, but the context is good. Top of a trading range, possible second leg trap where the bulls really need momentum and they're not getting it. And then that creates a strong breakout. So sell the close by probably bar 26, 27, still sell the close. The problem as we get lower is we enter the buy zone of the trading range. So as strong as this sell-off is, it's not breaking out much. It's still big up, big down. And so you have to treat it like a trading range. And maybe for support, here's low, slightly higher low. And actually I wanted to demonstrate the way I saw it today. And for that, let's switch over to the day only. So the market's selling off, but we can always draw support and resistance. We have a high and a higher high. So the bulls will argue it's a bull trend. It's a broad bull channel, but it's a bull channel. Higher highs and higher lows. So you can see as we approach this trend line, this is an imaginary line just taken by drawing from the high of bar 2 to the high of 24, creating a parallel. You can see the market's response to that support. It recognizes it. It's probably minor after this approach. Do you really want to buy here? Is there a good stop order buy? Of course not. 37 trying to break out, but 2 legs against a strong bear breakout, second leg down, still likely. And if it's a trading range day, which it looks like it is, may have to go down to a new low, but probably buyers down here. Now for the rest of the day, well, first of all, we started to contract here into really tight range, but it's a bear channel. Lower highs, lower lows. 46, you expect a bull breakout of a bull channel or a bear channel. But that's 1 bar closing above. We're still below the moving average. No follow through. So reversal right back down. Another attempt, and then 49. There was, I believe Jerome Powell spoke at 1:30 today, so this was the report, but the price action story still makes sense. I mean, this isn't a crazy bar. 49 is simply a bear breakout. Breakout of what? We had a triangle, tried to break to the upside, failed, and we're breaking to the downside. 49 breaking below 48 bars to the left, closing on its low. Probably a major breakout going lower. It's possible that the market's in a broad bear channel. And we can see the reaction actually to that parallel. So what's so fascinating to me about price action and how markets behave is that they behave so consistently. Like they're very well behaved. If you take the time to learn how to read a chart and then to really quietly observe and let the chart speak to you, and it tells the story. But that's of course developed over years of studying. I mean, I would only recommend Brooks and Ali Moin-Afshari, but it takes years for the information to really sink in, for you to trust it, for you to be able to recall it, active recall. And then it's a whole other thing to apply that knowledge into successful trading. It's one thing to read a chart well, but then you're an analyst. So one thing that resonated with me that Bob Proctor said was that reading and memorizing are not going to make you successful. It's the understanding and then the application of wise thoughts that count. So you must understand the idea. You must go out and act on the idea, regardless of how much your old program wants to hold you back. You've got to bust out of that shell, and you've got to do the thing you've got to do. And what that means to me is really study the Brooks trading course and learn how charts behave, how markets work, fundamentals, technical analysis, put it all together. And the reality is that trying to memorize the books or what Al says is not how it works. I think, unfortunately, that's kind of how a lot of us got brought up in school. You memorize things for a test. The test comes and passes, and you remember the answers for the test, and then you lose the information after that, which means the information never became a part of you. Memorization is a lot different than when you truly understand something. I believe it becomes a part of you. You plant it in your subconscious mind. And as always, I recommend the Brooks trading course for that, and then to make your own videos. Just talk through a chart, record yourself, try to articulate what you see, draw support and resistance, and practice. Just show up every day. Because I will say, I've been studying Al for over 6 years now, and my practice was not always as efficient as it is now. But one thing that I learned from those past years, I learned how to show up, and that built discipline and consistency. So showing up is better than nothing at all. I think someone said I forget how it goes. The smallest of implementations beats the grandest of ideas, or something like that. Do something, take action, and spend time looking at charts and thinking about charts. And really understand it. Don't just listen and memorize. So that's it for this one. I also want to add, I don't know how many people stick around till the end, but I might take a step back from YouTube, and I'm not sure yet, but I feel a little bit overloaded with things right now. I'll share this because I was going to do a membership video. I think I still will, but for trading today, I took one trade and it was a loss, and I thought it was a system trade, but it wasn't. And I was distracted because I was working on other system things in the background, and then I have a paint bar indicator. The bar lit up. It was bar 37, 3-bar micro channel. I set my limit order to buy the 50% pullback, and I just exited below 35 and took a loss on that one. And then I realized, and context aside, because I'm taking all the signals, but the problem was that it was like 2, 1, pullback, 2. So later on in the day, there would have been a similar setup here. 3-bar micro channel, buy the 50% pullback, scalp out. But at this point, I really wasn't watching the chart anymore. And so I want to share my thoughts on this too. It took me a long time to finally sit down and just build a trading system. And part of it, I did some self-reflection. I had to pause there. Okay, so I said I was doing some self-reflection, and one thing that I'm guilty of is perfectionism. And I hold high standards for myself, and this is okay, but it holds me back because I have this deep desire for precision, and I sometimes don't want to move forward unless what I'm doing feels really perfect and the time feels right, and I fear making the wrong move, even if I'm experimenting. So this really slows me down. And so what I realized is that systems evolve through usage, not just from the design. So what I mean by that is build a system. Build a bad system. It does not matter what the system is. You just have to make sure there's a repeatable process you can follow. And it can be anything. I know that's really open-ended, but to kind of guide you in the right direction, it can be something as simple as you want to trade a low 2 and a bear trend, okay? Do we have 10 bars below the moving average? Yes, it's a bear trend. Do we have a low 2, low 1, pullback, low 2? Yes, we do. And this is really, let me even back up and try to organize my thoughts here and try to share what's meaningful to me. For trading, you need a chart reading system to basically filter context, and then you need the actual trading execution. What are you going to do? Where's your entry? Where's your stop? Where's your target? So for the chart reading part, let's think through it. First of all, is it a trend? Is it a trading range? It's a trading range through here, but at some point we get a bear breakout. Maybe the bear trend began here, but after you collect 10 or more bars below the moving average, you're getting lower highs, lower lows. You might be in a bear trend. So that means it's okay to look for low twos. The reason you do the context filter is because you don't want to look for low twos in a bull trend. So you want to make sure it's at least a trading range and you're looking to sell high, or it's a bear trend and you're looking to sell a second reversal attempt. You're trying to catch the trend resumption, the continuation pattern. Okay, so 10 plus bars below the moving average. Lower lows, lower highs. We have open gaps, another open gap here. And then what about the signal? So we said we need two legs, one, pull back, two. And then bar 61 breaks out and closes below the low of the prior bar. So maybe you sell the close 61. And you have a process. So you have a chart reading filter where you make sure you're in the correct context to deploy the system. And then you deploy the system and you come up with the entry, the stop, the target, the expectation. That's all drawn to you. You find that in the level 2 study. Now, the reason I'm saying all this is because it took me a long time to understand all of this and to get to a point where I think I can explain it pretty simply. So you start by creating a system. It doesn't matter how bad it is. It doesn't matter if it loses almost every trade. Just make sure you have a repeatable process, because from there you trade the system. The market tells you your weak points and it shows you where you can improve, and it shows you maybe filters. Maybe don't take the setup when it occurs here. Maybe go for 1R in a trading range and swing for 2R or more in a trend. But you need that repeatable process. And then I would also say, I find a lot of benefit to taking breaks, and you can use the chart analogy. So you don't want to be, I don't know, we've had more bear days recently. Let's look at trying to make a point about how I would suggest approaching your work. You want to work like a small pullback bull trend. Nothing super climactic, and there's little breaks along the way, but ultimately the market rallies and rallies and rallies. And if I can find a similar, basically the opposite example, something like this. Buy climax, pause, buy climax, pause, buy climax. Unsustainable buying. This is not a small pullback trend. This is a bull leg in a trading range. You don't want to work like this and overwork yourself, overexert, not take the necessary breaks. It requires balance, and I think you feel that out with experience and time. But that was another thing I was guilty of, which is work, no balance. And even today it wasn't as good as it could be. It's hard for me to want to take a break when I'm in the flow, I'm in the zone, and things are clicking and working well. But I would recommend, even if you can take 5 minutes, step back and meditate, just close your eyes, turn your brain off, do something except besides looking at a chart for a couple minutes and decompress. Then you come back later with fresh eyes and everything starts making sense. And that's pretty much it, I think, for today. like I said, I might take a step back from YouTube. Oh yeah, the whole point with what I'm explaining here is I have this system, this 3-bar micro channel system, and I kind of hate it. And with the back testing and with my level 2 study, it has a positive expectancy. You're supposed to have positive cash flow if you trade it, but I don't even really care because the system doesn't really fit my personality and my chart reading very well. It's so simple and rigid. I have to add some, I don't know, human brain to it, I guess. I mean, it's so simple that you could program a computer to do it. And the returns are that of a computer algorithm. It's not so good. We have a huge advantage as humans over the computers in that way to see the nuances, and it's really hard to code for context. The computers have the advantage of no emotions, not getting tired, perfect execution, speed. But I think in the long run, the humans really have the huge advantage if you can just get to the point where you can understand how to read a chart well and then know what to do and when you need to do it. I think of discipline as the ability to do the right thing when you have to do it and to not do things you know to be wrong. It's always okay to make mistakes if you don't know what you're doing, but you have to learn from your mistakes. And then once you know the wrong thing, what not to do, you cannot keep making the same mistake. So with all of that, I'm in the process of developing other systems that are better fits for me. Like, for example, today I was watching it in real time before my eyes, and it makes me kind of, I get excited because I think, well, things are finally clicking, and it really makes sense. Even if I'm not capitalizing on it yet, I have faith that in time my systems are coming together and it's all good. But the way I'm trading right now, like I said, the 3-bar micro channel system, I really don't like it. But it taught me discipline, stick to my guns, follow the process, be process oriented, don't care about the outcome. And it's helped me, like I said, building a bad system helped me to, and I don't mean to say bad system, but a system that is so simple but is finally built and laid out. It's helped me get to the point where I can build other systems that feel better for me, and it's more fun to build these systems, and it's more fun, or I'm more looking forward to deploying these systems. They're not ready to go yet, but one of them, for example, is this high 2 at the bottom of a trading range. I talked about it this morning, or earlier in the video about this morning. Big up, big down, it's a trading range. Breakout of a bear channel, so 75% chance you get the reversal. High 1, high 2. What I'm looking for is a bull breakout above the prior bar, above the high 2. So I'm not buying above bar 10. I'm buying the close of bar 11. That's the plan as of right now. But it's in the development process. It's not perfect. Hasn't been deployed yet. But you can see 1R, 15, it reached it. And that felt good to watch. And then later on in the day, same here, the low 2. Saw the close 61. Good trade. And they're very simple. That's another thing. There's old conditioning, I think. And let me back up. Here's an advantage that new traders have over those who have been trading for several years and still haven't found the success they're looking for. A new trader can come into trading with an open mind, blank slate, and no damaging thoughts and beliefs. Whereas someone like me, I've been studying Al for 6 years, there's a lot of bad habits that I need to undo. And that could be, those used to be actual bad habits with trading. My discipline has cleaned up a lot. But even just limiting beliefs, like if you talk to people about day trading, you're going to probably get crap about it and hear that it's impossible or only 1% succeed and you can't do it or whatever. You're probably going to hear negative things. So keep it to yourself. Don't talk to others, or at least don't listen to them. Don't let it affect you. And that's just one example. The whole point is that someone that's new can come into it if they have an open mind and they have the right information. Al Brooks, Ali, you can really figure this stuff out within a year or two. And then, this is a motivation for me to make the videos I make. Hopefully I'm resonating with people similar to me. We've been studying for years, and it's hard to gain traction. What you're going to realize is you probably know way more than enough. Like, you're an elite chart reader, and you're way overqualified, and all you have to do is organize the information, simplify it, come up with simple processes or systems to follow, and then just trade them and practice. And over time, you're inevitably going to get better if you pay attention to the mistakes you make and to what can be improved. I'm kind of just rambling at this point. I hope this resonates, and I'm going to wrap it up here. So thanks, everybody, and I'll talk to everybody soon.